Hi, and welcome to today's webinar on Supercharge Your Workday Financial Management with AI-based bots, brought to you by Auditoria. I'm Naomi Secor, SSON's Global Managing Director. I'm really excited to have all of you with us today and to introduce this session where we are going to cover the blockers to standardizing processes across the finance function, navigating and overcoming lack of visibility with stagnant data and manual processes, enabling cash performance and finance transformation, and how to mitigate fraud and risk and accelerate decision-making with smarter, more precise insights. So we have got great content planned for you. Just a couple of housekeeping items to make sure you have the most seamless experience. You can maximize your view of the slides in the media player if you need to see anything closer. On the bottom of your console, you're going to see a Q&A tab where you can pose questions to the speakers, and we encourage you to do so. We're going to be taking questions. We have our speakers with us live today. And there's a question mark where you can see answers to commonly, frequently asked questions. But if you have any technical issues, you can also message me and my colleagues in the Q&A. And we have a resources tab with some great additional resources from our sponsors at Auditoria AI. We've provided a copy of the slides, the Auditoria AI 2021 Automation Survey, and a white paper on the value of frictionless finance. So please do pick those goodies up, as well as connect with our speakers on the platform. So who do we have with us today? We have Elaine Nowak, who is the Director of Product Marketing at Auditoria AI, and in her role as Director of Product Marketing, she's dedicated to developing and articulating compelling value propositions and targeting content, working with thought leaders, industry and subject matter experts, and analysts to communicate the benefits of value of Auditoria AI. And we have Terence Wampler, who's the General Manager, Financial Applications Development at Workday. Terence is the General Manager there. He's previously served as the VP of Product Strategy, and he is responsible for leading the strategy and development for the entire suite of financials products. He joined Workday in 2019 after spending 25 years in multiple senior roles. So welcome to the both of you, and thanks for being here.
Thanks so much, Naomi. Okay, so I think I'll just jump in here and just talk real quick about the agenda, what we're going to cover. First, I'm going to talk a little bit about this fifth industrial revolution and what that is, what that looks like. Then we'll talk a little bit about the state of automation in the back office, and then the evolving role of the CFO, challenges in the office of the CFO, advances in technology, and then how to get started on an automation journey. So first off, I'll talk a little bit about this cusp of the fifth industrial revolution and what that means. So when you think back in the late 1700s, that really marked the first industrial revolution, when an invention propelled operations to a new level in the world. And since then, we've seen a few of these milestone changes happen. And the onset of each one of these revolutions was sparked by a fundamental change to the way business was accomplished. And each invention represents a point in time when productivity hit a ceiling until something was unlocked to usher in a new era of exponential instead of linear growth. And that really catapulted the progress to the next level. And it kickstarted a phase of galvanized expansion that happens at each one of these revolutions. So now we are on the cusp of this fifth industrial revolution. That involves the massive adoption of artificial intelligence and cognitive systems to accelerate and transform the way work gets done. So the time to embrace this technology is now, and the place of the greatest need in the business world is the finance back office and the workplace of the chief financial officer. So having said that, I'd like to now have a poll so we can kind of get into what this fifth industrial revolution means to you. So to put it in context, how much time does your team spend a week on follow-up, approvals, requesting documentation, and communicating? So you've got the pop-up for the poll has come there. You've got the multiple choice answers. Is it that you spend less than an hour? Is it that you spend 1 to 5 hours weekly? Is it you spend 6 to 10 hours? Maybe you spend more than 10 hours a week on things like follow-up approvals and requesting documentation and communicating. So if you could just go ahead and maybe it doesn't apply to you. Maybe you don't spend time doing this type of things. That's not what your role entails. Okay, so as that poll question, any thoughts, Terrance, on this poll? in terms of how much time, is spent a week for teams?
Oh, I think it's more than 10 hours, a lot more. At least that's my experience.
Yes, very good. And so as the poll goes on, we'll check that out. I suspect you are probably right on the money with it, Terrance. And okay, so let's see the results. And there you go. In looking at the results that we have, more than 10 hours got the majority of the votes, 28.6%, although actually it's tied with doesn't apply. So that means that we have a set of people on the call. And a little later, we're going to do another poll to ask about people's roles. So not surprising, 10 hours. And as a matter of fact, this actually ties into what we found on this annual survey. So Auditoria conducted the survey, the state of automation in the back office, and we found results that resoundingly pointed to the fact that the corporate finance back office really needs to step up and embrace automation. And that despite the pandemic, there was acceleration. We saw some digital transformation that happened for offices and departments with this whole shift to this remote operations, but the corporate finance back office remained essentially unchanged and has been unchanged for the last few years. So the facts seem to be that the pandemic actually made it worse. And I'll show that here where we have a comparative of what the survey results were in 2020 on the left side and what they were in 2021 on the right side. And there are two stats that really jump out. One is the drop in the less than 1 hour category. So you can see on the left, it was like 40% of time was spent less than an hour a week. And then if you look on the right, that dropped to only 5% of people said, I spend less than an hour doing all this kind of follow-up repetitive kind of work. And then the other stat that I think is super interesting is the stat that says, again, the 10 hours a week. And Terrance, you said it comes as no surprise to you that this 10-hour plus and the increase in that area, I think it was like something like 150%. I'm not really great at math, but that's the jump from what it was in 2020 to what it was in 2021. And then just to go into a few more of the facts around this this survey that we did, and that's in your resource packet. You heard Naomi refer to that earlier as we started the webinar. But there was an overwhelming number of tasks and processes that, we understand it puts this undue stress on finance teams, given the number of manual, repetitive type work and tasks that they need to perform daily. So when we asked, is your finance back office sufficiently automated? Almost 60% said, nope, it's not. And when we asked how many of the team's tasks are automated, 78% said that less than half of their team's tasks were automated. 37% said they don't even use advanced technologies. And when we look at the stats again, 1/3 said accounts payable was the most manual, and 1/4 said accounts receivable was the most manual. I actually don't think that this is a surprise. I don't think it's going to surprise you either, Terrance, given how much operations in accounts payable and accounts receivable are executed manually. I mean, just the nature of this type of work with the individual follow-ups with customers and vendors and parsing and extracting, insight from unstructured documents, things like invoices and contracts and tax forms, all of that it tends to stay in that manual area. And I think tying this back to the Industrial Revolution, the lack of embracing advanced technology within ERP systems, I think it's made an incredible amount of pent-up demand. And, these manual tasks are really begging for a technology facelift. And I think that while cloud ERP software has been beneficial in the past, and it sort of did the job, more modern technology can really transform aspects of business. And we see that it has transformed in many areas. Just the finance team is the area I think that could really use it now. So understanding what's possible, let's do our next poll question. And this one is, what is your role? So where do you fall in the finance back office for those who are on our webinar today? Is it in accounting? Are you in procurement or supply chain? Maybe you're in FP&A. Maybe you're in the IT department. Maybe you're in HR or payroll. Maybe you're one of the C-level, an executive on the call with us, or maybe you're just another area. So if you could just answer this poll question real quick. The survey results were sort of targeted for most of the accounting area. AP and AR. So let's see what the nature. And I think as that poll question goes on, I'm going to just jump to the next slide. And then this is where Terrence and I will go into how is the role of the Office of the CFO evolving. I know I've been doing a lot of talking, Terrence, but I'm going to talk to these next two slides, and then I'm going to have you jump in with your thoughts as well.
Yeah, no problem.
Sure. I just think that when we look at the CF role, traditionally it's been viewed, they're viewed as the leader, a protector, and an accountant, and they serve functions in areas such as management and finance reporting, investor relations, record keeping and books, and also in areas of compliance. And as leaders, the CFOs enable others by being forward-looking and strategic. As protectors, they must optimize their organization's risk posture, and they have to really help organizations avoid things like surprises. And as accountants, they streamline and they have to be fast and accurate with their processes and information. But the role is changing. What we're seeing and what I've heard is that CFOs must now position themselves for a new transformational model, one that requires a new skill set to deal with a disruptive landscape. And they must apply innovation to their accountant, protector, and leadership roles to truly transform. So I see this role of the CFO is moving from a trustee role, so someone who was traditionally the custodian at preserving value, into a more visionary one where they are the architect creating value. And then just to talk a little bit more about this emerging role of the CFO, how must they create value? I think part of this new visionary role for the CFO comes from COVID. One of the primary lessons that all executives learned over this last crazy year was that they cannot control or even predict certain outside events. The best CFOs could do was to create flexible business models and then react quickly and decisively if the conditions deteriorated. But they also had to be able to capitalize aggressively when opportunities emerged. So in light of these learnings, the CFO now needs to look more closely at a wider range of issues to implement a winning strategy. The CFO understands that strategic success cannot be achieved without financial success, and that the linkage of these two key dimensions is realizing the expected values from the strategy and all the way through to execution. And this new role must drive the direction and success of the organization to achieve value realization by employing strategic design making and harmonizing the business strategies. The governance model must ensure effective alignment with the enterprise and strive to increase collaboration and transparency to support decision-making and accountability across the organization. The articulation of the market positioning is going to be reinforced by this emerging new role for the CFO, because they're the face of the company to the market, and they will need to present positioning and value in a distinctive and differentiating manner. And then I think when it comes to risk management, the CFO needs to really think about framing those relevant risks and reassessing how to evaluate and mitigate the impact of those risks. And from a performance management perspective, the new CFO performs a vital role in not simply just tallying results and metrics, but in shaping the overall assessment framework. So, Terrence, your turn. What are your thoughts on the CFO agenda?
Oh, that's great. Thank you, Elaine. And good morning, everybody. You painted such a wonderful picture around how the role of the CFO has evolved. Everything that you've outlined from our perspective points to finance needing to essentially evolve into what we describe as a high-performing collaborative team that the business trusts and respects. We describe this as a team that's revered for its ability to continually simplify its business processes and to be able to deliver what we call a clear guidance on those evolving business activities and strategies. Now, for us, we think for this to happen, first we need finance to move from what we call a transaction operator to a strategic advisor and business partner. And that basically lets them unleash the talent within finance to drive that greater organizational agility. Next, with the right data, we think finance can deliver the trusted business insights that the company wants, increasing that business confidence with faster, more accurate decisions. And going faster is always great. And then finally, we think finance needs what we call intelligent and efficient operations to unlock the potential of their business process. And that'll allow them to transform or eliminate some of that human intervention, basically taking away risk and bringing control back to the organization. Should we go look at the poll results now, Elaine?
Yes. Can they come back up on the screen? Or do I just go back to where they were?
Yeah, well, I would think we would want to see that, but I'm sure how we do it. Maybe this way. There you go.
Okay, so what is your current role? It looks like about a third said accounting, a third said IT, and a third said HR and payroll.
Wow, okay, nice mix. Well, thank you, everybody. That was great.
Yes, yes, interesting. Okay, so let's jump back to our next question. It's what challenges exist today that keep the office of the CFO from the reality that you and I have outlined, Terrance, this emerging role. So I think that when we look at the challenges in the office of the CFO, there are some real obstacles. And you know, even the information that we've seen from the results of the survey, for example, or maybe even conversations I've had with credit and AP and AR professionals, there is still a lot of this repetitive manual work being done by humans. And when companies are small, I think they can get away with solving some of these classic types of challenges by hiring a part-time accountant, or maybe even a set of part-time consultants, maybe even a temporary controller or some other kind of temporary role. But I think when these volumes begin to rise and companies are growing and expanding, then the back office teams, what they can handle, that's when it starts to get difficult. And I think that's where they really need to employ technology and solutions. It becomes not just a nice to have, but a need to have. Now, I've also heard, you know, there's a fear of being replaced by a machine, right? So I think that that's something that you have to really reassure, that automation is not going to take away a job. Rather, what it does is it transforms the nature of work as we know it. It doesn't mean fewer jobs. When you put technology in place, actually, it means different jobs, and they require different skills. So when automated systems are in place, they crunch numbers, they can aggregate data, they can handle correspondence, then your finance professionals, your humans, will be freed up to do more strategic things like analyzing the data, uncovering insights, and maybe even projecting the future. And I think putting new technology, it doesn't mean that that's a death sentence for a job, but it's a call to action for accounting and finance professionals. There needs to be a company-wide effort to support employees using new technologies and tools, and retraining your current employees, and then also hiring tech-savvy employees. And I think you really need to shift away from this sort of descriptive and diagnostic statistics and move towards more predictive and prescriptive analytics. And again, you got to shift your teams from transactional type work to more analytical and strategic type work that's process oriented, and focus on those business processes and workflows versus just executing and getting tasks done, so that just sort of going through a punch list of activities and getting it done. So I think, in exploring this whole idea of the skill set more closely, you really need to ask yourself, are your current teams equipped with the necessary skills and what they need to employ and sort of just really excel using advanced technology? So when you think about the skill sets that you need things like teams that have data savviness. So that's the ability to compare and contrast results in the data and to translate analysis. Okay, it's one thing to do all this work and get your insights, but then you have to put it into action. So that's where you need to have humans. Also, you need to be creative and innovative, the ability to conceive of really kind of different ideas and other ways to approach things, recognizing patterns, and then really just being curious with lots of different interests, but also, being able to be, to give and receive constructive criticism. And then I think another skill that's going to be super important is relationship management. So when you put technology in place and it takes over all of these sort of mundane, repetitive tasks, then now you can hone those interpersonal skills, and then, help to positively influence decisions. That's something that only a human could do. Someone who's open, approachable, collaborative. They also have to have some business acumen. So understand key business drivers, have a knowledge of factors, know how to prioritize the business demands and needs. And they should be able to identify problems and prioritize alternatives. And I think it's also important to have this strategic mindset. So again, you get rid of these repetitive, sort of mundane clerical type tasks. Now now that person who's freed up can develop strategic frameworks. They can anticipate market changes. They can look to problem solve and outline, what is the direction we should moving towards. And I think also, and especially in light of this kind of disruptive economy that we are living in, you really have to be able to be agile and be able to change quickly. And you have to be comfortable with shifting your priorities and handle things like ambiguity, but still be able to progress. And I think the last key challenge, and then I'm going to have you, Terrance, go into go over for what you see as the challenges for the CFO and for the back office. I also think there's a cyclical nature that's not conducive to change. And the back office, the finance teams in specific, they can't afford massive disruptions to their ongoing projects and reporting. I think they spend the majority of the day, conducting these manual repetitive tasks, but they're the perfect type of tasks that you can automate and allow teams to focus on the more essential items that help move the needle for the department and for the organization. So I think you need to prepare and assess as a team. You really need to conduct workshops. You need to do things like blueprinting and scope out your as-is before, putting new software and technology in place. I think you can also do things like implement technology in parallel, or you could roll it out in phases, continue to do work with some of your team members, and then while you have others who are keeping the status quo until the new processes are learned, and then you roll it out to the rest of the team. Or another approach is to choose a business unit maybe, or a region, implement there first, disperse your work across other business areas until the software is live and working well, and then start rolling on your other teams. And then I think it's also very important when you consider you need quick implementations, quick ROI, especially in the finance back office. You need to look at purpose-built and configurable technology. So it's got to have the fast implementation times. It's got to be easy to deploy, intuitive to understand, so that your team doesn't need a degree in coding, in order to have a steep learning curve and to get that software up and running. So, Terrance, tell us a little bit about your thoughts on the challenges.
Well, that was an outstanding evaluation, Elaine. And I'm going to kind of tie into what you talked about there, that it's a very cyclical process, not just in terms of evolution, but even how business processes work. So there's this concept around having to be able to plan, transact, and analyze. And I feel like manual operations are always compounded when you think about all the things that have changed in the last year or two. So we have even a tougher environment to work in. But even prior to that, we've always felt that finance spends way too much time on manual activities. And part of the problem is they spend too much time reconciling and validating data for accuracy. And that's because the information tends to live in multiple formats across different systems and that sort of thing. And that absolutely hampers the agility to quickly respond to changing market conditions. So if you go to the next slide for me. What happens, we think, is if you combine planning, transaction processing, and analysis functions to work off of a single data source, so tying to your kind of technology and uptaking stuff, then you're able to balance your time and resources because you minimize the movement, reconciliation, and manipulation of data. We all know finance spends a ton of time curating data, but they don't necessarily curate, or they don't necessarily trust the data they curate. But if they have it in a single place, they're going to spend a lot less time doing that. And so then if you click for me and go to the animation, shifting from the transaction operator we talked about to advisor really requires those intelligent financial processes that you referenced. So the ability to make them smart and learning. And so when technologies like machine learning are infused into all of the processes that someone has, like you talked about quick wins, go out, identify what you need in the back office, where you can automate. If you can do something with automation, machine learning type stuff, then each step within a specific transaction lifecycle, the process will learn and it'll become more intelligent over time. So you don't necessarily have to tackle this holistically. You can do it kind of a flow at a time or a process step at a time. And then, as we've talked about before, we feel like these intelligent processes will absolutely reduce that human intervention and thus risk. Remember that humans are great at making decisions and using judgment. Humans are not great at doing repetitive tasks. It's just in our nature. And so if we can use machines, and to your point about fear of being replaced, we're not replacing people, we're actually upskilling people. We're giving them an opportunity to do what they do better, which is make decisions and use their judgment on how to do stuff. And when finance is spending their time on doing, making judgments and approving things, that's going to make sure you have those optimal decisions for your business.
Yes, so true, so true. So I think this brings us to our next question. What is different about today, and why is now more than ever the time for CFOs to embrace technology? And Terrance, why don't you cover this one first?
Yeah, I'd love to. I mean, from my perspective, it's really the sheer volume of data that's being generated, and of course, the pace of change, specifically in technology that we've talked about. I'm very, very impressed with many of the companies and how they have, or organizations even, and how they have adapted to remote work, how they become collaborative, how kids and schools have adopted technology for remote learning, whatever it happens to be. And I think there's some things that'll stay with us for a very long time, or even make our lives better in many ways. But it really is just the volume of data and the change in technology that's driving stuff. In fact, there's a little study that said by 2025, it's estimated that there's going to be 463 exabytes of data created each day globally. That's a lot of information. And we feel like finance is going to have to be able to exploit this data quickly to get business insights and to support those business decisions that they need, as well as their strategic initiatives. And we think that technology should be about enabling every CFO to unlock the potential of their people, their processes, and their data. The problem has been, historically, as you laid out at the beginning of this, finance has used technology about automating paper-based or manual processes and just focused exclusively on increasing efficiency and productivity. And while this focus did look at the productivity of the people and efficiency of the processes, the data was largely a means to an end, meaning prepare financial statements or a management report. Today, technology for finance needs to be suited to evolve to be able to consume vast amounts of data. It also has to be intelligent and sophisticated enough to process structured and unstructured data. It has to be able to detect patterns and trends. It has to surface anomalies. It has to suggest recommendations, even make predictions. Imagine an environment where you had self-reconciling accounts or a system making recommendations around policies. So I think a lot has changed around technology, and it's really the volume of data that's driving that.
483 exabytes. That is a lot of zeros.
Okay.
Yeah. And, I think coming back and sort of tying that back into so how does the CFO prioritize? What do in light of this, all this data, all this advanced technology, I think the CFO now has to have a sort of a new business model, and that's going to allow companies to evolve, to innovate, and to adapt so they can be well positioned to succeed. Right now, I think CFOs really have this opportunity to create a new and improved normal for the finance back office. And I think the crisis has accelerated the pace of change. And the companies that embraced the change, who are innovative, they're the ones that are reaping all the rewards. So with these new focuses in mind for the CFO, we're talking about data, people, technology, and how important it is to have all those together with the processes. I think now CFOs have to be more like a generalist C-suite leader, and they have to be more of a steward of the long term. If they want to take full advantage of opportunities as they arise and things like this advanced technology, they have to rethink the processes they currently have, and they need to reshape their organization, I think, in a very fundamental level. They're going to need to manage the disruption to get through these efforts without breaking an already stretched function. And I think with the consequences of this global pandemic, with the economic collapse, social unrest, we saw a lot of diverse political climate even. All these have had profound impacts on employees, on people. And I think the CFO is going to have to be prepared to make decisions on where and how to rebuild their team and the culture within their organizations. When organizations embrace things like diversity, equity, and inclusion, then your team members from all these different backgrounds, they can really access a much wider range of skills, a wider range of perspectives and insights. And that's going to increase the problem-solving aptitude and the results, and that becomes better and faster decision-making because of all of this diversity, because of the agility, because you put some technology in place. So I think in this, world that we live in, it's going to be about innovation. And I think that CFOs really need to work cross-functionally to ensure that their organizations are positioned for growth, because the economy inevitably is going to start to expand again. It's going to really explode. And that means that CFOs need to make investments in their team and in technology. They're going to have to look at, investing in research and development and making strategic transactions to create an organization that's lean and competitive moving forward. Now, all this talk about technology, what I'd like to do for our next question, I think I want to talk about, what technology is available today and how is that technology different than yesterday. So in looking here, about 12 years ago, the first grade of automation solutions showed up. So you had your business processes, you had your robotic process automation solutions. They helped to support the automation needs. And these products did very, very well. I think particularly if your business processes were incredibly well defined, then they worked largely within, the parameters that you set up for your processes within the company and within very structured data. But over the course of the last 10 years, as more and more applications have gone into the cloud, I think business processes have become much more complex. So they touch both internal and external users, right? And as a result, a new grade of software solutions were developed and to help support these dynamic business processes. And it was the ability, to your point, when you talked about all those exabytes of data, right? They were structured and unstructured data. Data is no longer so tidy in a neat little package. So, you've got things like invoices and tax forms and purchase orders that have a bunch of different type of information that can come in different formats, come in all sorts of different shapes and sizes. And I think with high-tech applications that become domain specific, they become intelligent, they're autonomous, they augment the human operators. And then the various executives and the appropriate, the support staff, they're able to execute their business processes through completion. So I don't know if you're familiar with R. Ray Wang. He's the CEO of Constellation Research. He talked about the shift from RPA to intelligent autonomous apps is underway, and that the industry is ripe for change, and companies on the front line of creating the self-driving autonomous organization of the future are taking both mind share and market share. So we're seeing more and more this uptick in things like AI cognitive systems, things like computer vision, natural language processing, natural language understanding, and machine learning, right? A lot of those big vocabulary words, right? When OCR came out, it's a technology that's been around 10, 15 years. It was character-driven text extraction. Now with computer vision, it's a system and a solution that's able to understand digital images or videos and extract context and meaning. It's that next level. And when you combine into that things like natural language processing and natural language understanding, modern technology is able to achieve unprecedented levels of understanding from both structured and unstructured data inputs. It allows this technology to understand, interpret, and manipulate human language. Machine learning, it empowers the tech itself to be self-learning, right? So to be able to recognize patterns, to look at the data, to understand when something is repetitive, and then to change that into an automated process. This ability to analyze the written word and find intent or insight, it's critical to the enterprise and to the future of the enterprise. So when you think about bots that are enhanced with artificial intelligence, they will supercharge whatever system of record that you have, and they'll execute these redundant tasks. They'll monitor things like inboxes. They'll be able to respond to inquiries. They're going to be able to fetch documents, and they can escalate issues. So Terrance, let's have you talk a little bit about technology and the 4 R's.
Sure. So I talked a little bit earlier about the idea that humans are good at judgment and making decisions and, kind of doing approvals of things. Machines are good at making recommendations. So everybody here or that has college-age kids or younger have Spotify or TikTok, and they make great recommendations about what you want to listen to or watch next. Machines are good at reconciling things, so matching up 2 numbers or making sure that things are in compliance or match rules, etc. Machines are excellent at retrieving information, meaning I can go out and ask a question. So everybody's asked their, Alexa, Siri bots at home, what's the weather, what's some status, what's a question or a story. And they're also really good at reviewing information. So this is, I could go out and identify anomalies for you. So I can go out and look for patterns that says, hey, these journals look a little bit suspect to me. This expense item looks a little bit suspect, that sort of thing. So as we think about applying machines to finance, I always like to use the analogy of where we are with autonomous vehicles, right? So if we can get to a self-driving ERP one day, that would be great. So where we sit today is there's lots of good stories around autonomous vehicles out on the road doing interesting stuff. But what people should recognize is we have warehouses full of automated forklifts or other tools running, and they never have an accident. They run around. And that's because the technology is being applied in a very controlled environment, which then creates a greater degree of trust. And what's really happening there is the environment of the warehouse has been adapted to the machine. In other words, there's sensors all over the warehouse that help the machine drive and see. When we talk about autonomous vehicles, we're trying to teach those vehicles to learn in a human world where they have to read stop signs and traffic lights and understand pedestrian movement and unfortunately understand other human drivers, which is really difficult for a machine to do. And so what we need to do is to start building sensors and infrastructure that lets those autonomous vehicles operate more clearly with sensors and signals and lights and parking locations. We also need the ability to have, imagine, sensors in kids' shoes or balls where the machine, the car is going to know before we as human could even see what that kid's going to do and move to the street kind of thing. And what happens is we have to think about our finance operations the same way, which is we have to put infrastructure and signals in so that the transactions can be processed and that the data can be understood by the machine and then rendered to the human in a way that has a nice, engaging user experience. And that means, imagine now, instead of having a system that's about entering transactions with screens or reviewing reports, it's really more about looking at process overall. What's my throughput? How does the volume work? Where do I see bottlenecks? Should I be changing policies? Should I be doing other stuff? And so the way that we'll start to engage with these machines will be very similar to how we think autonomous vehicles will start to engage with infrastructure for ourselves over time. And we're pretty excited to try to lead the way there and to figure out this problem with folks on the phone today and other companies.
Absolutely. And I'd love that it's the 4 R's too. I think it makes it easier to remember. So we have our next question, our last poll question actually for today. Are you planning on evaluating advanced technologies? Are you going to jump on the wave of this 5th industrial revolution? Something like artificial intelligence for your back office functions. So yes, you're currently evaluating. Yes, you're going to be doing some, advanced technology research evaluation in the next 6 months to a year. Maybe yes, but sometime next year, you're going to put it a little bit further off into the future. No, not at this time. You're just going to sit at your desk and crunch away at those manual tasks. Or maybe you're already fully automated. I'd love to see if anyone's number is that 5th response, you're fully automated. Kudos to you. I think that would be incredible. And, to the whole point that you made there, Terrance, with all these advances in technology, and you think about technologies all around us, but why are we so afraid to put it into the back office when it could really just change the whole way that work gets done? I think that kind of leads us into the next question, because this is what we hear a lot, right? Oh, well, we got the poll question up here. It looks like currently evaluating, and then, oh, so there you go. 2/3 said that they were next 6 to 12 months. So I think it's definitely on the radar for people, more so than it has been in, I'd say, the last 5 years. You're really starting to hear this happen. So again, I think this leads into our next one. When people say, yes, I know I need to do this, I'm not sure where to start, right? How do I start? How do I move my back office forward? And I think you have some practical next steps to share.
Yeah, that's great, Elaine. And we do hear that, which is, where should I start? So first we think about this is, is it to cloud or not to cloud? And so we think if you're on-premise today, moving to cloud is really the first step. And because we don't think it's any longer if, it's really when. So it's just like everything else in our daily lives. We just tend to put stuff in a central location, let someone else manage that service for us, and then we can access it from wherever we are. Next is, we think you should be identifying a cloud-based financial solution that embraces innovative technology and then makes it easy to consume. We've talked earlier about the pace of technology change is only going to get faster, and you need the ability to incorporate that in a way that's not disruptive to your business. Finance professionals are conservative by nature, and that's good for organizations. And finance folks need the ability to uptake technology, but not in a disruptive way. And so you need to identify a solution that can do that for you. They embrace the innovative technology, but make it easy to consume. Next is, as you think about where to transform, first is do an audit of your back office processes. Finance leads really need to understand the day-to-day activities through the back office to understand what could and should be transformed. Like, where are you on the process maturity model? Is this really a good one for you? Is it really advanced, or is it really complicated and kind of old or not very mature? And try to transform the ones that get you the most value. We've talked a lot about the idea of moving out of transaction operator, the idea of upskilling strategies. So we think that automation opens up a bunch of opportunities for finance and accounting professionals to be able to more contribute to business strategy rather than doing kind of data input or data reconciliation. And then finally, automation of the corporate back office really translates to dollar figures. An example is a reduction in day sales outstanding translates directly into free cash flow. And then basically doing the right business analysis lets you reinvest that money into new business opportunities. So we think now is the time to really start looking at the automation of these different flows.
Amen.
Yeah.
So I think just in looking at this, we're coming about 15 minutes left or so in the webinar. So I think we're going to talk now just the key takeaways. We've had a lot of conversation here today. Terrance covered a lot of things. I think what I want to just summarize is, overcoming blockers, this clerical work, the administrative work that could be automated. You want to drive standardization. You want to drive your accuracy across the finance function. So I think automating repetitive tasks is really going to allow for this dynamic data aggregation, the extraction and transformation, and that's going to provide an enriched environment with greater visibility and collaboration among teams and functions. And then I think, you are going to be able to navigate from this lack of visibility, because when you have stagnant data and you have manual processes, you really don't get to get that clarity of data. I think you talked about that single source of truth, Terrance, that single place that the truth resides. When, if you've got data and you don't trust your data, then that's useless data, right? So you can transform the finance function by using the latest and the most innovative technologies that we talked about today, things like the cloud data operations, the machine learning, the natural language processing, the computer vision, and that's going to help improve your cash performance. And it's going to help organizations to drive drive their cash performance and their financial transformation. And then I think also touching on, you talked about this risk averse group, and it's a good thing, as you said, but you still need to identify risk and mitigate, fraud. And when you have the ability to accelerate your decision making, and you can do it with smarter, more precise insights, that's going to allow you to make smarter, faster, and more precise decisions. And I think this can lead to dramatically increase your efficiencies, and that's going to lead to the greater margins, the DSO savings that you talked about, Terrance, this improved cash performance. I mean, you could literally recover thousands of hours annually in the back office if you were to automate those tasks. And that's going to help you also gain greater insight into the cash position and, this ability to get faster insights and to process data if you have it done by advanced tech. And Terrance, any last thoughts that you'd like to leave with the audience before we move to the Q&A portion?
No, the one small thing, which is just to reiterate that this technology is going to continue to move quickly and evolve fast, right? We're at 4 Rs now. I imagine there will be a 5th R coming sometime soon. I can't even predict what it's going to be yet, but it's moving fast, and it's kind of a fun time.
Yes, I would absolutely agree. There's some very cool technology out there, and I think it would behoove the finance back office to take advantage of what's available. Okay, so at this point, I think what I'm going to do is turn it back over to Naomi and see if we had any questions that came in from the audience. And again, at this point, I would encourage you, if you do have questions, maybe there's something that you want to ask myself or Terrance, go ahead and put it in the chat, and we can get to those questions.
So Elaine, there is one. Oh, sorry to cut you off. So there is one in the chat, and I was kind of reading it while you were going through some of the key takeaways, and so I'll take a shot at it. So Brittany, thank you very much for asking this question. And I don't know if everyone can see what it is, but basically she's saying, look, we're having a hard time justifying the investment, particularly the capital investment of investing in automation, predominantly because it's not driving headcount reduction. It's driving that upskilling of them doing analysis. And so they're having a hard time putting the business case together in recommendation. And my recommendation, what I've seen be successful, is putting metrics around the current business process that you have that are tied to financial kind of metrics or goals, right? How much is it costing you to process that transaction? How many errors do you have? How many times is there inaccuracy coming in that process that requires other corrections later on? And how much do each of those things cost? Now, to put that into a real world perspective, I'll give you an example. There is a customer that we've talked to that's in the insurance business. And as you all know, during COVID, some of the insurance companies around property, casualty, auto gave refunds to their consumers because there was less driving going on or other things happening. And so now imagine that when you issue all of these checks as refunds, not everybody cashes one of those checks. So now when they don't cash that check, you are required by regulatory authorities to go ask the individual, hey, you didn't cash that check, would you like us to send you another one? And now imagine that invariably they always say yes. But now imagine in the back office, what happens is there's a process that somebody has to identify that the check was issued, identify that the check wasn't cleared, identify who the person is that should be contacted, identify someone to contact that person, get the result back from that person. If they say yes, issue the new check, cancel the old check, issue a new check. And imagine that being a relatively manual process because it wasn't something that as an insurance company you automated regularly because you didn't give refunds all the time. But now imagine it is at scale and it's a problem. So now they could tie all those cost components together and the risk and having those uncashed checks sit on their books and the complexity of reconciliation, the impact of cash forecasting, all of those kind of things. And they could invest in automation, and they were able to automate that flow entirely where a bot could identify uncleared checks. It could go out and send a message through email to the contact. The email could then say yes or no, or the person could say yes or no. The bot would come back, it would cancel the check, issue the new payment, and then it would track it accordingly. So the idea here around automating steps is really about putting metrics around the business process first, and that's what I was talking about before, which is identify where you have it today on your business process maturity, and then that generally helps you build the business case to go figure out how to automate that. I don't know, Elaine, if you had anything to add to that.
Yeah, I did have one thought on this too, because this is what, you see that how do you make the business case? And there is a lot of literature and resources out there that can help you put that together. But I think one of the key things, and I'm just thinking in terms of, I know some customers where this has happened, it's about the ability to grow and expand. So I see, Brittany, with your question, it's make the case because it's hard to find real savings with workforce reduction, since you're just upskilling and you have the same number of people. But it's the scalability of technology that makes it so powerful. So every organization, their goal is to be profitable and to continue to grow and expand. And that's where the technology is the greatest advantage, is that as you grow and expand and your volumes increase, your transactions increase, all this work increases, your team members, the number of people that are working don't have to increase, because the technology in place can handle these greater volumes and that kind of thing. So there's a consideration there for a future looking ROI, in addition to all those things you said too, Terrance, and just such an interesting way of packaging and putting it together. So that's what I would say as well in terms of a business case.
Okay. That's good.
Do we have some other questions?
Yeah, thank you very much. We do have a couple of other questions, and we have time for one more. So just some of the qualities to look at when evaluating a technology vendor.
So one of the qualities to look for. I'll take this one first, Terrance, and then maybe you can talk to us about this. I think it's really important when you look at the vendors to really understand, are they going to go with you and become a partner? I think if it's just a buyer-seller relationship and, you get the software and then you're expected to just, okay, now execute and have it in place and it should just be good on its own, and they never talk to you again, you'll get those packages that'll then if you don't have that support and a true partnership with your vendor or the person that you're buying your solutions and software from, then you're not going to be as successful with putting that technology in place. So I think it's really important to look for someone who has who's a partner in going to market with you in terms of putting that solution in place, supporting it throughout the process, and then maintaining a relationship with you even after the software is in place. And then I think another thing you need to look for is, does that vendor or that solution have the expertise in your domain? So is it built specifically for the finance function, for example? Or is it just a one-size-fits-all type technology that's it isn't specific to a functional area like finance or human resources or something specific for the back office? So I think it's important to have software and the people that created it understand your space, where you come from in terms of back office and finance and that kind of thing. Terrance, your thoughts on this one?
Oh, I do, and thank you. I agree with everything you said, Elaine, and I'll supplement it with one kind of dimension as well, which is it is about business value, right? I mean, all these concepts of technology that we've been talking about, it really is, you should be looking for a vendor who helps you, like Brittany's question, identify the business value that you're going to get with that technology solution. And I think that ties very well to knowing the domain that you described, which is you should be looking for a vendor that's going to stay with you for a while, who has an innovation platform, because the technology they help you with the automation is going to need to evolve and grow. But most importantly, they should be working with you on the business value that you're going to get by implementing that technology. It's not about just selling you technology. It's about actually helping you build your business case and get value from the technology. That's really the goal of your purchase. And that should be the goal of that software supplier.
Yep, I totally agree with that as well.
Excellent. Well, thank you. As we're coming to the end here, excellent presentation. I want to remind the attendees that you can connect with our speakers in the console. I've seen some other questions coming through, so do feel free to connect with them for any follow-up. And any parting thoughts before we close out, Elaine or Terrance?
I would just say, just ride this wave of this fifth industrial revolution, the artificial intelligence, these cognitive systems, this advanced technology. Don't be afraid to, you can start out small even, automate a piece of something or a part of something just to sort of see how that works and get your feet wet that way. But don't be afraid to embrace. And again, for Brittany, there's a lot of resources out there for making the business case for putting an advanced technology solution in place.
Yeah, mine is look to your kids to see how they adopt technology, because that's in my eyes a ton. So they're always a good mentor of how to learn and approach problems. So and it's been great to be here. Thank you, guys.
Yes,
I agree. I agree with that. I learned from my 4- and 6-year-olds all the time on how to use some of this technology. So really good part of advice here. So there's also some goodies for you in the digital gift bag. I just want to remind everyone before you do leave the platform, do grab those. There is the Auditoria AI 2021 automation survey in there and a white paper on the value of frictionless finance. Thanks, everyone, for attending, and I wish you a wonderful rest of your day. Bye-bye.
Thank you.